good afternoon, traders. And, looking across the Asian boards today, we can see a little bit of weakness. I think it's interesting just to get a sense that this time last week, we saw this big turnaround in risk, this huge snapback in risk assets. And whether we see that coming through in US trade and European trade is obviously yet to be seen. Certainly the signs are that we are seeing some buying coming through in our out of hours markets in US and European markets. As you can see here, we've got the FTSE and DAX called up 11 and 15 points respectively. You've got Wall Street cash up 33 points. I think we've seen a little bit of a melt up, very, very small grind coming through. And once again, it's when we came out and saw the PBOC fixing its midpoint of $CNY, the onshore Chinese renminbi, by somewhat less than what the market was looking for. That's the fourth day in a row that they could have fixed it higher, given where the sort of analyst models were, and they've actually fixed it lower, so the renminbi being slightly stronger than what the market was looking for. And that's kind of given us this idea that the PBOC do not want to engage in a full-scale escalation of devaluing their currency by more than what the market was looking for. I think that would be your sort of situation where you're going to see much higher implied volatility. But the PBOC restraining from weakening their currency as much as perhaps people have been anticipating, and that's seeing the Aussie dollar move a little bit higher. Actually, if you look at the ASX 200, you can see it's 65, 69 down 20 points. Most of the selling coming through in the healthcare space, most of the selling coming through in the discretionary space. So those two sectors alone taking quite a lot of points from the market today. Healthcare obviously being a reflection of that slightly stronger Australian dollar we've seen on the session. Probably a bit of short covering coming through. If you have a look at the event risk, not just because of what we've been seeing in the Chinese fixing, but also what we've been seeing in the domestic data. You've seen NAB business conditions coming out at 2. I guess last month we saw it at 3, so a slight deterioration, very small deterioration in business conditions. But if you have a look at business confidence on the NAB server, that came out at 4. Last month that came out at 2. So, a few reasons to buy the Aussie dollar, but nothing too significant. Tomorrow, when we get the wage data for Q2, that will be a much more significant increase if we do see, depending on the outcome of that number there as well. So one thing we are looking at, and certainly in Hong Kong as well, you've seen that market down 378 points at the moment. Also, everyone's wondering what's happening with the protests. Are we going to get another day where the airports are shut down as those protesters come in there? And obviously what's going to be the snapback from the Chinese government in that situation, if there is any one at all. But certainly we're on edge. We're watching that situation. People are obviously pretty concerned about what they're seeing, and that's why we're seeing Hong Kong stocks down nearly over, or just over 1% at the moment. If you have a look at gold, up $4 at the moment. It's a juggernaut, 15.15. There is so much love for gold. Whether I'm looking at the options market, I'm looking at the skew of call volatility over put volatility, pretty much never been this high. If you have a look at the commitment as traders report each week, you can see that gold net longs about as high as we've seen them for a long period of time. Doesn't mean necessarily we're going to get a subsequent reversal. We need something to cause that. As we go into US trade though, do have a look at the US CPI numbers. They come out at 10:30. The market's looking for a headline to come out at 1.7%, up from 1.6%. They're expecting core to stay at 2.1%, but I think that poses a bit of an event risk. In terms of how the US dollar and also the S&P relate to economic data, the first one which is most sensitive to is non-farm payrolls, then it's retail sales, which we get later in the week, and then we also see subsequently after that US CPI numbers. So the CPI numbers is an important driver of the dollar and also what we're seeing in the S&P. So do keep an eye on that. If we do see hotter than expected numbers, then I think you'll probably see the S&P coming under pressure. You'll probably see dollar yen moving up a little bit. Weaker numbers. Have a look at dollar Swiss on the daily chart. You can see it just testing that double bottom at the moment. A breakthrough of those low support levels, I think obviously would have some big determination. Everyone's wanting to be long the yen. Everyone's wanting to be long the Swiss franc at the moment. There's higher volatility in markets and those currencies are working really well, as is gold. So we're having a watch what's happening in that CPI number for a near-term driver. But also have a look at the pound, because euro sterling has been on an absolute tear, but probably dwarfed by the gains that we've been, or the weakness we've been seeing in sterling yen and also sterling Swiss. Both those currencies literally have found no buyers whatsoever. Now we are signing a bit of a bottom coming through, but the trend is your friend in that situation. I think rallies are there to be sold. 6:30 we do get the claimant counts coming through, and the market, there is no survey in terms of the jobless claims coming through, but in terms of what we've been seeing for the unemployment numbers, well, the market's looking for that to stay at 3.8%. Any kind of better data there will probably give you an opportunity to sell into the rally. That's my best call, because I do believe that on 3rd of September, from that moment onwards, there's a very high chance we are going to see a vote of no confidence being pulled on Boris Johnson's government, and the subsequent chance then of a general election raises markedly, of which is further downside in the pound there.